You're watching Morning Markets on BNN Bloomberg. Copper is fluctuating today after reaching a 7-month high on Wednesday. Our next guest believes Chinese reopening will continue to boost demand for the metal. He has a few stocks that he's particularly bullish on. For a look at copper, we've got Dalton Baretto. He's managing partner of equity research for metals and mining at Canaccord Genuity. Thanks so much for being with us, Dalton.
Thank you for having me.
So let's square something here. Dr. Copper is supposed to be so exposed to the economy. How can it rally at a time where we've got the most well-telegraphed recession coming down the pipeline?
So I think the important thing to remember is that we're talking about a recession here in the Western world, and that doesn't necessarily apply to China, which buys 60% of the world's copper, right? And the stars are aligning in China right now. You've got a reopening scenario, which is good for their economy generally, good for their manufacturing, good for a general ramp up of economic activity. Then you've got more and more support every day being announced for their property sector. And their property sector is 25% of global copper demand. So it is the biggest consumer of copper today. And then the third piece is infrastructure spending. So having gone through a couple of years of zero COVID, they are now ramping up. The party will not let an economic recovery get derailed. And so they are backfilling any weakness with infrastructure spending. And the infrastructure spending of today is not the roads and bridges of yesterday. It's 5G networks, it's electric vehicle charging stations, it's broadband networks. And all of this is very copper intensive, right? So you've got all of these stars aligning on the demand side.
What if the reopening is messy, it's lumpy, and we've had some strategists come on and say it's not going to be a straight line up. If it's lumpy, if it's messy, but ultimately we're going to this destination, does that introduce some volatility?
It will introduce volatility, but then you've got the second leg of the stool in terms of the copper thesis, which is that supply is very tight and is only getting tighter, right? And so any incremental demand matters, whether it's lumpy or not. We entered this year with under 3 days of available copper inventory, right? Over the last kind of 3 months or so, we've seen everyone from big producers like Codelco to guys down here like Lundin Mining all cutting their guidance for this year. There's been about 700,000 tons of copper that has been pulled out of guidance.
And why is that? Is it because it's just harder to find? Is it harder to mine these days? The costs are going up. What's driving that?
There's a bunch of different factors. Last year, the new factor that we saw was weather. So climate change impacts supply as well. Some of these guys that mine in places like Brazil, for example, Brazil's had 2 years of 1 in 100-year rainfall events. So that's disrupted supply in the first half of this year. The same things happen in Africa. And then you've got just general operating issues, and you've got social unrest in places in Latin America that disrupt production, disrupt supplies. And so it all leads to this, fairly potent cocktail for for copper prices in particular, where you've got the China reopening scenario, you've got very tight supply, and the third leg of the stool, which we didn't talk about, which is the U.S. dollar, which has pulled back 10% from its September peaks.
So that's going to help the buying power of these other countries.
Absolutely.
Let's talk about stocks that you like, because I know that's the juicy part that our viewers are waiting for. Capstone Mining, copper mining, and it looks like from your note to clients, you want leverage to copper, but you're also looking for a catalyst.
Absolutely.
So it's not just like a broad-based buy the sector.
Absolutely, and because, like you said, there will be volatility on the way up, right? So we are fairly bullish this year. We put out an outlook piece called Fasten Your Seatbelts, because that's kind of our view of this year. And Capstone Copper is one of the names I point out that has huge leverage to copper prices. It's already done very well this year. It will continue to go up. But the key catalyst for Capstone is that you will see a re-rating in that company's multiples in the back half of this year, because they are building a project in Chile that will be done by the end of this year that will materially increase their production profile from next year onwards by up to 40%.
So you mentioned how all these companies are pulling back on their copper production forecast. Does this perhaps increase the interest, the appetite for acquisitions and buying production versus finding it and mining it themselves?
The bigger guys have been looking to buy production for a few years now, and that's based on the longer-term trend around decarbonization. Very difficult to buy production and make it accretive because there's a lot of buyers and nobody's selling.
Your second pick is Hudbay Minerals. What's the exposure Because it mines a bunch of things, gold included. So what's the exposure you're getting to copper, and what's the catalyst?
So it's about 60% copper, 25% gold, and then the rest is silver, molybdenum, and a bunch of minor metals. The key catalyst, it's not so much of a catalyst as a free cash flow story for this year. So, Hudbay, for the first time in a very long time, started generating free cash flow in Q2 of this year, and that story's carried over. It underperformed its peers dramatically last year, down 25%. And, so the valuation is very compelling. But what that does do is it gives you a free cash flow yield that is, head and shoulders above the rest of its peers.
Why did it underperform? Because sometimes, is that management issue? Is that, being penalized by the market? What was the source of underperformance?
In my opinion, it's a few different things. It's exposure to Peru, where there's been a lot of unrest. It's a project that they're in the process of designing, and they're going through the iterations right now. But they came out with a very high capex bill, and so investors were concerned that they'd move forward with it, even though their strategy is completely changed. They're slow playing it. They're generating cash. They're protecting the balance sheet. They're looking for a partner. And so, over the course of this year, I think you'll see the market fully start to appreciate the free cash flow generation as well as the change in strategy, and that should help the multiples re-rate.
Okay, we only have about 30 seconds left, but Ivanhoe is your last one. It's back to its highs. What kind of upside do you see here?
Pretty meaningful. I mean, they own probably the best copper mine on the planet. Huge production, low cost, growth on the horizon, a catalyst coming up very, very soon in terms of an expansion study.